I remember when I was a sophomore in college, out of nowhere, it seemed like everyone I knew was starting to recruit for investment banking. I had barely just picked my major at that point, so I didn't know what the heck investment banking was. But it seemed like the shiny, competitive thing to do, and a lot of upperclassmen I thought were ambitious and charismatic were doing it. Despite not really knowing what investment banking was and too embarrassed and anxious to blatantly ask somebody, I decided to recruit for it too. In hindsight, I feel super lucky because I personally didn't hate investment banking. In fact, I really enjoyed most of it. But I've seen so many students like 2 months into their jobs being like, wait, this is what we do? And hating it and regretting it. So in this video, I'm going to explain investment banking to you like I wish it was done for me back when I was a sophomore in college. It's not going to be the most exhaustive or technically accurate definition, but I think it'll be more helpful as a starting point in actually wrapping your head around what the heck do we do as an investment banker. I'll put the Investopedia definition in my description below if a more technical definition is what you prefer. Welcome back to my channel. My name is Peter. You might know me as the Lifestyle Banker from TikTok. I'm an ex-investment banker and ex-Hollywood content analyst who started making content. And in this channel, I try my best to demystify careers and trends in finance, tech, and entertainment. This is admittedly a slightly silly analogy. Imagine a door-to-door car salesman. I know those aren't a thing, but imagine if there was one. They would go around knocking on doors asking people, hey, do you want to buy these cars? Or, hey, you got any cars that you'd like me to sell for you? Conceptually, investment bankers essentially do the same thing, but with companies instead of cars. Instead of knocking on the doors of people's homes, an investment banker knocks on the door of CEOs and CFOs. Now, if you're a bulge bracket Wall Street banker, those doors just happen to be attached to Fortune 500 companies. Instead of selling cars, you're selling companies or financial products related to them. If you're a car salesman, you might specialize in German or American or Japanese cars, right? Or maybe you specialize in sports cars or trucks or convertibles. Bankers are the same way. They might be coverage bankers in charge of covering a specific industry sector. Generally, those include tech, media, telecom or TMT, healthcare, consumer retail or CRG, oil and gas, sometimes called energy, NatRes or natural resources, chemicals, industrials, financial institutions or FIG, real estate, and sometimes sponsors, which is like private equity shops. When you buy a car, do you just buy it straight up with cash? No, you have to borrow some money, right? Or in finance jargon, you have to raise capital. It's the same with buying and selling companies. There are product bankers that specialize in specific financial products that help you raise money. Is it equity? Is it debt? To fit your needs. The major groups in products include equity capital markets, debt capital markets, leveraged finance. Sometimes M&A, mergers and acquisitions, are considered a product as well. There's also like restructuring, which is reorganizing distressed companies. There's more nuanced groups than that, but I'll skip that for this video. Buying and selling entire companies, or like selling the entire car, is called M&A or mergers and acquisitions. But product bankers come in for many other transactions too. A company might need to raise money to not buy a whole company, but to launch a new business line or product, to launch internationally, to go public or grow more aggressively, or for R&D, research and development. The car analogy is kind of a stretch in this scenario, but it's kind of be like if you borrowed money to buy a custom valve on your engine that made your car more fuel efficient, and then you used part of that money you saved on gas to pay back that money to the people that lent you money. Yeah. It's a stretch, but it checks out. Okay. So if banker is just a car salesman, then why is there so much more mystique and competition and money and stakes and prestige around it, right? Well, it's because the cars we're talking about just happen to be millions to hundreds of millions to billions of dollars instead of $20,000. I think of how much more complex a company is versus a car. A company has employees, lots of moving parts, pays taxes, it spits out money every month, and has much more regulations too, right? Also, a company is a one-of-a-kind asset, and it's irreplaceable. A car is generally a commodity. But ultimately, the reason I use this example is because they're both self-contained assets with a discernible value. It just takes a little bit more math. You just need a lot more people doing the math behind valuing the upside potential and downside risk of a company versus a car. That's why there's a whole bank around it and a whole deal team around it. And in comparison, the price of a car is just set, right? So there's no one doing the math behind how much a car is worth, maybe just a little bit of bargaining. And the risk of buying your debt, so the risk of lending you money, is pretty set too, right? It's just a few metrics like your income, your age, your credit score, the loan duration, and then someone clicks a button and then boom, you have your interest rates or monthly payments. On Wall Street, you have a whole team of analysts or, a whole deal team calculating and doing the math, financial modeling to spit out the monthly payments and interest rates. Since investment banking is higher stakes, has more scrutiny from the government, there's more money to be made, more money to be lost, but a lot less transactions per year, right? Think about how many cars are sold per year versus how many companies are sold per year. There's just much more of a workforce, more math, more rules to follow, more stress, more competition per transaction. It's not rocket science. It's not brain surgery. It's just really high level, more complex sales. I used a car salesman example because most people just understand cars in their day-to-day lives better. But if it helps, think of these investment banker / car salesmen as specializing in limited edition, high-end luxury, customized, souped-up racing cars that only people with like multi-million-dollar wallets have access to. The point I'm trying to make is not that they're stuck up or they're dealing with obnoxiously luxurious consumer goods. My point is that the role of a broker dealer holds true across markets, even when comparing a consumer market like cars to a business to business B2B market like companies buying companies. As a senior banker, like a managing director, a director, or a vice president, a VP, you're maintaining the relationships between the major buyers and sellers and operators in your space, right? You go to conventions, you schmooze. Your job is to know the inner scoop and the latest trends and news in the industry and be seen as like the inside player to help your clients make the first move and make the first strategic step faster so that so that you and them can both make money faster than their competition, A banker should know how inflation and yield curves and new regulations in your space, world events and competitors' actions are going to affect the client's strategy and bottom line. In car terms, think about like a good luxury car salesman. They should know that Mazda stopped selling a certain car part after 2016, so you have to go to a third-party seller for that part. How is the tariff on steel impacting used car prices? So should I buy now or later? If you're a good car salesman, all the collectors and dealerships and even manufacturers probably know you, trust you, and like you, and maybe see you as their go-to guy for information, introductions, financings, and deals. So as junior bankers, your analysts, associates, and younger VPs, you're doing the math behind all these different transactions and valuations and helping with marketing materials like newsletters, pitch books, and investment memorandums. But, at a high level, you're essentially making brochures for your car salesman bosses or on behalf of your clients so that they can sell their debt or equity. You also help run the auction process because a company is sold in an auction much more like a house than a car, actually. And this is called execution. So there's like sales, there's pitching, and then there's executing a deal and running that auction process. And then, on top of that, you also help some admin type consolidation research stuff. So that's my little explanation of banking, how I wish it was explained to me as a student. Let me know in the comments if there was anything that clicked for you. If you found this video helpful or interesting, consider subscribing and clicking that like button. I will see you in one of my next videos. Bye.